Yo my people, welcome back to episode 5 of Project 30, a 30-day module where I teach you guys how to trade completely free of charge. Now in this video I'm going to be going over something called AMD, also known as the power of free. This is a very powerful concept which you guys can use whether you're trading forex, crypto, futures, whatever it may be. I've back tested this and I've seen it on other pairs and it works very effectively. I'll prove it to you guys in this video. Now in reality, if you compare this with a few other confluences, this is a very powerful strategy that you guys can use. It's not personally the strategy that I use, however I do know the power that it has behind it, if that makes sense. I know how effective it works in the market. Now for those of you guys that have never seen my face before, my name is OneFX. I'm a content creator and I'm a day trader as well, and right now you guys are watching Project 30. So if you guys haven't watched the first few episodes, make sure you go back and check that out, because I'm teaching you guys from the ground up. I'm teaching you guys how to trade even if you have zero experience in this game. Now if you guys are interested in that, make sure you check out the link in the bio. But without further ado, let's get right into this episode. So cool, you guys should know the drill by now. Get your pen and paper, make sure you're taking notes. If you don't have a pen and paper in front of you and you're not taking notes, get off of this video because you're not taking trading seriously. But nevertheless, AMD / power of free is the title of this video, I guess, of your page. So let's get straight into it. Now AMD simply stands for accumulation, manipulation, distribution. Now this is a very powerful concept. I'm going to prove it to you guys. Now I want you guys to make another note of something. Time is fractal, meaning that these concepts will apply on every single time frame. Whether you be on the 15-minute, the 1-minute, the hourly, the 4-hour, whatever it is, this will work. And this concept is what the markets run off of. We need a form of accumulation. Why do we need accumulation? Because this builds liquidity at the highs. What does it also do? It builds liquidity at the lows. And we know the market is always chasing liquidity. The market is based off of liquidity. It's fuel for the market. So without liquidity, the market will not move and it will start to create it. It will start to generate liquidity like this. If you guys have seen the other episodes, you guys should know we never trade this cycle of the market. We never trade when the market is accumulating. Why? Because you're just going to get chopped up. And like I said to you guys, the market will never be this perfect, like, yo, we're accumulating, we're manipulating, we're going to distribute next. It will try to fake you out a little bit. The accumulation move will try make it look like, yo, we're bullish, we're making a higher high, you guys want to be buying. Or never mind, we're making a lower low, you guys want to be selling. So it's very risky to trade these market conditions, and in this case you guys do not want to be trading. But after the accumulation phase, there is a manipulation phase. Now how is this manipulation in the markets? Two things. First of all, it is taking out these buyers that had their stop losses here. Remember, when there's a swing low like this, or when there's a level of support in the market like this, it's not just your average Tom, Dick and Harry trading. There are thousands and millions of people with their stop losses on the line here. So of course there's a lot of money on the line. So first thing the manipulation phase does is it's essentially a liquidity sweep. We sweep liquidity. Another thing we do as well is sellers would look at this as a breaker structure. You guys can see we have made a lower low. So on the retracement, they will enter their sells. When they're entering sells, where they're putting their stop losses on these swing highs that will be in the manipulation leg. What does that generate? More liquidity. So it's manipulating participants into the market to take them out. Does that make sense? Now I put this in orange because this is still tradable. Yes, you guys can still, with some advanced concepts, catch the manipulation phase lower. Catching the manipulation is slightly harder because you have to time the markets correctly. If you guys want more details on that, make sure you check out the link in the bio. But after the manipulation phase, we get a distribution. This is what we want to be trading. This is why I put it in green. And that is simply because the accumulation phase this is bad quality price action. This ranging is very slow. The manipulation phase is catchable, however it's risky because you have to know when to get out. You have to time the market correctly as well. However, the distribution phase is very efficient price action. It will just run to your TP. Now after we get the manipulation phase, we will get a market structure shift. Now if you guys watched the other episodes, you guys would know that a market structure shift is telling us that price wants to continue going in that direction. We would view this as a liquidity sweep and a market structure shift, not just a breaker structure to continue going lower. After this market structure shift, we want to take an entry. Now you guys are probably thinking, where do I take my entry? Like, do I just wait for the market structure shift and then buy? What do I do? Wait for the retracement and take an entry off of a PDRA. Why is this? Because this is a point of interest where we can expect the market to reverse. So if we tap into a fair value gap, which is a PDRA, a point of interest where we can expect a reversal, then of course when price retraces back into this fair value gap and we enter the market, we can expect the distribution phase to carry out and take out this opposing side of liquidity. This is a very easy, low complex strategy, I guess. I wouldn't really say it's a strategy because you can't just trade purely based off of accumulation, manipulation, distribution. However, it's kind of the backbone of the market. The market has to move in this. It might not be as clean as this. However, in every single cycle of the market, there is a form of AMD. I will prove this to you guys in a second. So I'm hoping you guys understand. If you guys have any questions, leave it in the comments below. But nevertheless, moving on. Now I want you guys to understand another thing. In every single candle, there is AMD playing out within the candle. Every single candle has an open, a high, a low, and a close. For every bullish candle, price will always open, low, high, and then close. Why is this? We will open and we will start to accumulate to generate liquidity. Once we generate this liquidity, we will manipulate and take out these early buyers. So this is the liquidity sweep. Ideally, at this point of time, we want to see us tap into a PDRA. Why? Because this is a stronger confluence that price wants to reverse. We're inside of a point of interest where we can expect a reversal. This would make more logical sense than for price to just randomly reverse after a swept liquidity. Does that make sense? We will next get our market structure shift towards the upside. This will confirm to us that price wants to go in the opposite direction. Then, of course, we want to get in. This right here will be the expansion. We will establish the high of the candle. and then we will close. Now ideally don't use this on a 1 minute time frame because it's a lot harder to predict it. However, this is very good on the higher time frame. Any higher time frame candles such as maybe the hourly, 4 hour, the 4 hour is good, the daily is very good. If you guys can use this on the daily time frame, this is very good. Why? Because all you have to do is figure out, cool, the day is going to be bullish, so I just have to wait for manipulation lower. Once I get the manipulation move lower, I'll wait for my market short to shift and then I will enter. It is that simple. Now the same concept applies for a bearish candle. However, this will be an open high low close. This should be the other way around. Hold up. Easy way to remember, is it going to be an open high low close or is it going to be an open low high close? Think of it like this. If we're bearish, we have to manipulate first, so we're going to open, go in the opposite direction and go high. Open high, then go low and then close low. Does that make sense? And if it was bullish, then it's going to be the other way around. We're going to open low, high and close. Why? Because we open, we accumulate, we manipulate in the opposite direction by going lower, and then we go high and close high. Does that make sense? So as you guys can see here, we have a very clean form of accumulation. We want to see the same exact thing play out. You guys can see liquidity is swept. We tap into a higher time frame PDO rate, a point of interest. We get our market shot to shift, price retraces. This is when we want to enter the market, and then we target the lows. Like I said, if you guys can master this and see it and train your eyes to see it in the real life like markets, then this is very overpowered. This is OP, yeah? And I'm hoping you guys understand that. Now let's go over some real life chart examples. So first things first, the most easiest way to identify it is look for a form of accumulation. Like I said to you guys, the market will never just make equal highs and equal lows and show you guys that, yo, I'm accumulating, don't trade me. It'll try to fake you out, and as you guys can see, it is slowly moving towards the downside. We have all of this liquidity built up at these highs. These are early sellers getting into the market. So we know that liquidity is resting here. So what is price going to do before it continues the trend, which is obviously being bearish? You guys can see we are constantly establishing lower lows and lower highs. Price will have to manipulate and go in the opposite direction. As you guys can see, boom, price manipulates. What do? We sweep liquidity. Once we sweep liquidity, what do we also do? We mitigate a fair value gap. This is a very good confluence because we know that this is a point of interest where we can expect a reversal. Now, if we go down to the lower time frame, as you guys can see, we get a market structure shift towards the downside. What does price do? It retraces back into this fair value gap. This is where you would ideally like to take your sell, and you would target liquidity resting below. As you guys can see, we have these relatively equal lows in the market. You can see prices invited early sellers into the market. They get taken out. This also invites what? Breakout traders into the market, because retail traders are looking at this as a trend line, which is a level of resistance. So when this level of resistance gets broken past, what happens? Breakout traders enter the market. They wait for a retest of the trend line and then they get in long. What does this do? It creates more liquidity at the lows. This is when we want to ideally get into the market and we would take this trade. Now remember what I said to you guys, time is fractal. So this is a 15-minute AMD cycle playing out. There will also be an AMD cycle on the lower time frame. Let me show you guys. As you guys can see, we still have the same accumulation phase here. However, what do we do on the lower time frame? We manipulate. This here is our manipulation move. How do I know it? Because what have we done? We have swept liquidity. Now that we swept liquidity, what do we need to confirm that it's a liquidity sweep and not a breaker structure to establish a lower low? We need a market structure shift. As you guys can see, this swing high here gets broken above. Now I want you guys to notice another thing. Price moves here with displacement. This market structure shift is a good market structure shift. Why? Because it's moving with displacement. You guys are probably thinking, what does displacement mean? Calm down, you're going to get some. Now, when price moves with displacement, it's simply just a verb to say that price is moving and it's leaving fair value gaps behind. As you guys can see here, when price is moving, we are leaving fair value gaps. You can see multiple fair value gaps here. When price was here, there was no displacement. As you guys can see, it's just chopping around. There's no fair value gaps being created. So we want to see a market structure shift with displacement. This is a better market structure shift than just a slow, choppy market structure shift, if that makes sense. Now, like I said to you guys want to be taking your entry off of fair value gaps. We can mark out this fair value gap here. We take our entry here. We put our stop loss on the low, and we simply target the opposing side of liquidity. This whole trend line, this accumulation phase here. Like I said to you guys, the distribution phase is very efficient price action. Price will move very quickly because we've invited all of these sellers into the market. We've taken out the buyers. Now we have to go and take out the sellers. And as you guys see, this trade played out very, very nicely. And like I said to you, time is fractal. So you see how within this lower time frame there was an AMD cycle, and within the higher time frame there was another AMD cycle. You guys can see how powerful this concept really is. I want you guys to make another note of something. This manipulation phase, it doesn't have to be the biggest leg in the world. So what I mean by that is if we simply have a form of accumulation and price just pinches out the highs and then it gives the market shot shift, this is enough. There's no rule in the book to say that price has to manipulate a lot. It has to manipulate a decent amount. All it has to do is just sweep liquidity. This liquidity sweep here is more than enough for us. Again, like I said, an easy way to identify it is just look for a form of accumulation. So I can just straight away see here we have a form of accumulation. If I drop down to the lower time frame, you guys can see a very clean form of accumulation. In a large sum of candles, there is hardly a move. The market's hardly moved anywhere. What do we then get? We get this liquidity sweep. We pinch liquidity. We take out all of these sellers, and we know that all of these buyers have their stop losses resting around this level here, which is a level of support. What do we then get? We wait for a market structure shift. As you guys can see here, this swing low gets closed below. This is a market structure shift with displacement. Price is moving and it's leaving fair value gaps behind. What do? We look for a fair value gap and we take our entry off of this fair value gap. Stop loss on the swing high, and then we target the opposing side of liquidity. And if we play this on, you guys can see we get sniped in and any second now, boom, TP hit. And once again, like I said to you, time is fractal. So there will be another AMD cycle within here. And I can straight away see it. We have this form of accumulation. We get this manipulation move. We sweep liquidity. We get our market short shift with displacement. We take our entry off of the fair value gap. And then we target the opposing side of liquidity, these highs here. This is a very clean example of lower time frame AMD and higher time frame AMD cycles playing out. Now, another point I want to prove to you guys is you can go to any pair. Let me just go over to, I don't know, Bitcoin. If we go over to Bitcoin, I can identify AMD. So straight off the bat, I can see a AMD cycle play out here. As you guys can see, price is clearly consolidating. It's chopping around, it's wasting time. What do we then get? We get a manipulation move. How do I know this is a manipulation move? Because we sweep these relatively equal highs resting above here. This whole level here where people are looking at this as a level of resistance, this gets taken. So sellers are now taken out of the market. What do we then need? A market structure shift. I don't know why the candles are looking at this, but I can see there's a market structure shift here. This fair value gap gets tapped back into. This is where we want to be selling. Stop loss on the highs. Of course, I would not be taking this trade because I don't trade Bitcoin. And let's just say we were to target, I don't know, this swing low resting down here. And just like that, you guys can see TP would have been hit. Again, very clean form of accumulation, manipulation of the highs, sweeping liquidity, and distribution of the lows. I want you guys to make one rule with this if you're going to apply it in the real markets. Let's just say here, you guys can see we have a very clean form of accumulation. We know that there's a lot of liquidity resting at this area here, the highs. Ideally, in this case, you guys would want to see a manipulation move to sweep liquidity, a market short shift, fair value gap, and then obviously entry. However, sometimes the market will be a bit weird and it will move a bit bent and it won't give you that manipulation. In this case, do not trade. I say this to my students all the time. No manipulation, no participation. You guys can see there was clearly no manipulation move here. We just straight away distribute towards the downside. If that's the case, it is what it is. Let the market do its thing. This is another clean form of accumulation. You guys can see accumulation. We manipulate the highs. This was the manipulation move. We sweep all of this liquidity and we mitigate sort of this imbalance here. And then we then distribute towards the downside. Like I said to you guys, I don't even trade Bitcoin, but you guys can see how this concept will still play out. And the final thing I want to show you guys is what I said to you guys at the start of the video. Open, high, low, close. So let's just go to the daily time frame and let's just find any random candle. Let's just say, I'm trying to find a decent candle with a wick. Let's just say that this candle here, you guys have seen that it's a bullish candle. So look, I'm going to show you guys this, how it's going to be an open, low, high, close. What do I mean by that? We're going to open here because it's the open of the candle. We're going to establish the low first. We're going to go establish the high of the day and then we're going to close. My point, what I'm trying to prove to you is how we establish the low first. We manipulate first on the daily time frame. So you guys have seen that it's open, high, low, close. I've marked out the levels for you. This is the open, this is the low, this is the high, this is the close. This is the daily candle. I'm going to show you guys what it looks like. You guys can see it's kind of accumulating. We establish the low first, you guys can see. We distribute towards the upside and then we establish the high of the day and then we close around here. You guys see very powerful concept. All of this liquidity here, these two relatively equal lows, they get taken. All of this liquidity here, again, more relatively equal lows, this gets taken. This is our liquidity sweep. And then we start the distribution towards the upside. The open, high, low, close theory, use it on the higher time frame. Let's just go over this candle here. You guys can see it's a bullish candle. So what we're going to do, open, low, high, close or open, high, low, close. We're going to open, establish the low first, manipulation, then establish the high and then close. Okay, you guys have seen the candle play out. So once again, the open, this is the daily candle, what it's looking like. You guys see we're kind of accumulating. This is accumulation. It looks like we're bullish. However, what it's doing is generating all of this liquidity here. This trend line is inviting trend line traders into the market. What then happens? We get our manipulation move. Then we get our distribution towards the upside and then we close. So I'm hoping this video helped you guys out. Like I said to you guys before, if you guys are trying to take your trading seriously and to the next level, make sure you check out the link in the bio. But anyways, it's been your boy OneFX. Take care, my people.